trade association. Something that speaks to all of us in one way or another. Here, we've got great panelists, which is SHARUL, ZULFADLY, FIONA, and ALWANI.
Thank you for joining us and giving plenty of time for discussion, so feel free to engage, ask questions, and share your thoughts. Let's make this open, honest, and inspiring conversations.
What is a trade association? According to Public Ruling Number 6/2005, trade association can be defined under Section 53, Clause 3, any association of person, of partnership, or of a person and partnership formed with the main object of safeguarding or promoting the business of its member. A trade association shall be deemed to be a body of person and not a partnership. Trade association can be registered under Society Act 1966 or under Company Act 2016. An organization will be regarded as a trade association if it fulfills two conditions. Firstly, all of its members must carry on a business. Secondly, its objective must be that of safeguarding or promoting the business of its member. However, an association is a not-trade association if such of association membership is also extended to those exercising employment. Trade association must be solely for members having business income. There is some example of trade associations such as Federation of Malaysian Manufacturers, Malaysian International Chamber of Commerce and Industry, MICCI, and Associated Chinese Chambers of Commerce.
Right now, I'm going to talk about the resident status. Resident status refers to a person's living status in a particular region or country like us in Malaysia. In trade association, the resident status isn't about where it registered, but it's about where the key decisions are made. For example, if the management and control happens in Malaysia, even just once a year, the associations can be considered as resident. The tax rates are eligible for the body of a person. There are two types of tax rates. The first one is for resident. The tax rate is the same as for the individual, which can be from 0% until 30%. Next one is for non-resident. Resident can only be taxed based on the flat rate, which is 30%.
The floor is now given to Mr. Fatli to discuss about business income and investment income.
Business income is an earnings or money you get from running a business. This could be from selling products like managing a shop and getting income from it, or offering services like working as an accountant. It also falls under the Section 4A of the Income Tax Act. Business income is taxed or charged based on your net profit. That means you first need to deduct the business expenses like rent, salaries, utility bills, and so on. Business income is active and it allows more deduction. If your business makes a loss, don't worry. The loss can be carried forward to reduce your tax in future. Now, let's look at investment income. This is the money you earn passively, meaning that you're not working for it daily. It comes from things like owning income-generating assets, like shares, property, or even fixed deposits. It is listed under Section 4C to Section 4F of the Income Tax Act. For example, dividend income, rental income, and even interest from saving. However, unlike business income, investment income has few deductions. You might be able to deduct things like repair costs for rental property, but overall, there are limited allowance. Also, if you make a loss from your investment, you usually can't carry it forward like you can with business income.
Mr. Sharul, can you share more about donations of trade association?
So, thank you. Donation. What is a donation in tax term? Donation is a voluntary gift of money or goods made to a qualified organization like a charity, religious group, NGO, or educational institution without expecting anything in return. For tax purpose, some of these donations are tax deductible. So, how donation help in tax? It will be help in tax deduction. When you donate to a recognized organization, you may be allowed to deduct the donation amount from your gross income by reducing your taxable income. Donation will be two. There will be donation received and donation paid by club. It will be treated different for tax purpose depending on their source or purpose and how they are utilized or allocated. Donation received normally from member or non-member for renovation, repair or improvement. Then this will be related as spending as capital receipt. So this is not taxable. If it have a balance, it will be taxable. For donation paid by club, it will be like donation to approved institution under section 44(6), then it will be taxable. That's all.
Thank you, Mr. Fadli and Mr. Sharul. Okay, what about Ms. Fiona? Can you share about deduction tax for trade association?
Next, I'm gonna explain about deduction tax. In Malaysia, the deduction tax for trade associations from an income tax perspective largely revolves around the general principles of deductibility of expenses under the Income Tax Act 1967, with specific consideration for how trade associations operate. Okay, let's break down on section 53(2)(b). On section 53(2)(b) of the Income Tax Act 1967, where it states any outgoings or expenses connected with the sums receivable on revenue account referred to in subsection 1. This refers to the expenses that a trade association incurs in earning the revenue from its members. For example, membership fees, event registration, service provided to members. However, if the same expenses incurred from the transaction of non-members, it will allowable under normal rules.
Now, I would like to invite Ms. ALWANI to share her insight on income tax exemption in trade association.
Thank you for letting me to speak today. Good evening everyone. Today I will be presenting about income tax exemption as it relates to resident trade association. Resident trade association are granted preferential tax treatments under Malaysian tax law. However, starting from year of assessment 2025, there will be new restrictions on the claimable amount for common revenue expenses and capital allowances. So, to determine the allowable amount for expenses and capital allowances, the tax authority have provided a formula which is for revenue expenses. The restriction is A multiplied by B over C, while for capital allowances is D multiplied by B over C, where A is for common revenue expenses, D is for capital allowance, while B is for membership subscriptions on gross, and C is for gross business income amount. This formula ensures that only a portion of the expenses and allowance related to exempt income can be claimed. So, according to Public Ruling 6/2005, this treatment helps distinguish between taxable and non-taxable income within trade associations. It ensures that tax exemptions are applied only to the appropriate portions of income and expenses. Okay, let's look at the tax treatments of different items received by trade associations. So first, membership fees, it is a tax exempted, while subscriptions, general contributions, and other association fees and entrance fees are taxable. But for seminar fees, there are specific cases, which is if the individual pay personally, it's not exempt, but it may qualify for tax relief. If the business pay and it's work related, it is tax deductible, and if the employer pays for work related purposes, it may be considered an expense exemption. So, in the summary, the tax exemption for trade associations is beneficial, but with the change effective from year of assessment 2025, it's important to apply the correct proportions when claiming expenses and allowances. That's all from me.
Back to Ms. Fiona, can you elaborate how to submit the tax form?
Okay, next for tax administration, where tax administration is registered under Society Act 1966 on company limited by guarantee under Companies Act 2016. Tax administration have a requirement, which is trade association should be registered with a tax file reference number commencing with the alphabet F. Moreover, trade associations are required to file their income tax return using Form TF for each year of assessment.
Ladies and gentlemen, we have now reached the end of our forum. Thank you